who will go through the Calter well result, also with an introduction to our new asset in Benin. John will also speak about our recent CPO results and provide a brief update across the rest of our portfolio. Towards the back end of the call, I'll provide a brief update on new ventures, and then we'll open the floor up to questions. Just before we kick off, there is a presentation uploaded on our website, which will probably be helpful if you have it in front of you, particularly when John's going through the technical slides. So, kicking off, a lot's happened since we hosted the last call at the end of December. In January, we announced our intention to move to AIM, and I'll go through that in a bit more detail shortly. We also announced approval of the production concession Selva in Italy. Fantastic result for our shareholders and for the company, and I definitely think it's been underappreciated by the market, largely because this asset opens the door to near-term cash flow for us, which is still on course for some time in 2020, and John will talk about that shortly. In February, we released CPRs on Watercross and Crown, Selva in Italy, and also on Jamaica. Jamaica was a particular highlight given that it increased the potential size of the first drill target, Calibri, by 10% and increased our chances of success from 16 to 20%, which really further supports our view that Jamaica is an exceptional prospect to have within a micro-cap portfolio. Also in February, we announced the spud of the Calter well in the southern North Sea. In March, the news flow continued. We completed our AIM move that we announced in January. We completed the Calter drill programs that we announced in February. And it's important to note that Calter is the second well that we've drilled in just over a year. And again, John will put some further context on the Calter well result. And like Selva, we believe that the Calter well result has not been clearly understood by the market yet, and we're hoping that certainly today's call will lend some clarity to that. In March, we also announced the new deal in Benin. We announced it last week in Africa, which complements our wider exploration plans for the company and our portfolio. Benin's a region that's well known to us, and as we've always said, it makes sense to stick to areas that we know well, in particular from our farmers, know that acreage and that play reasonably well. Benin is interesting in that it's similar to Jamaica in terms of potential size, and it also fits with our exploration model of low-cost entry with transformational upside. So, in terms of 2019, we've had a busy year, and as we approach the back end of March, we can say that we've had a busy 8 to 10 week start to the year, and we plan on continuing with that momentum. So if we just consider the existing asset portfolio for a second and how we've developed the existing asset base over the last year, well, starting with the two wells that we've drilled 2 wells within the last 14 months. We've completed the Jamaica seismic acquisition, which was the first seismic acquisition completed offshore Jamaica. We submitted the Selva development plan. We've got the Selva development plan approved. We've published CPOs across the entire portfolio. We've also cashed the business. The business is also cashed with approximately 3 million currently in the bank. We spudded Calter, and we announced the well results a couple of weeks ago. On top of all of that, we've added in Crown into the portfolio along with Benin. So we've had a busy 12 months in terms of portfolio development, and as I've said, we'll continue with that momentum. Just touching upon the AIM move for a second, which we completed 2.5 weeks ago. We're pleased to have that out of the way. It was quite a time-consuming project for the management team. The work undertaken over the last 3 months to complete the AIM move, manage our Calter position, complete the Benin deal, and also to advance a number of other new venture opportunities that we're assessing is a credit to the team and their commitment. And I can assure shareholders there was a lot of late nights worked in Q1 this year to bring these projects forward. On the AIM move itself, it was always our intention to move to AIM, and if you recall, we inherited our initial listing when we completed our reverse takeover of Centerra Energy back in July 2017. As a board, We wholeheartedly believe that in the short to medium term, that AIM is a better market for our company and a better fitting market for a company with our growth ambitions. In the medium to longer term, and as the United story grows, it's our intention to move the company to a larger market that would be a better size fit for a larger company, which we're obviously working very hard to become. We strongly believe that this is merely the beginning of a much larger growth story for the company. And I can assure all our shareholders that not just the board, but the wider United team is working very hard to deliver against that ambition. Whilst we haven't necessarily seen the results of our hard work reflected in the share price, we will continue to develop the portfolio, grow our company via sensible acquisitions and farm-ins, and continue to execute our work programme across 2019. I think at this stage it's probably appropriate to start talking about the assets in a bit more detail. I'll pass over to John, who'll put some wider context on well results, as I've said. He'll touch upon Benin and chat about the rest of our assets across our portfolio. And after that, as I've said, we'll touch upon new venture progress, and we can take some Q&A.
Okay, well, thanks, Brian. For those of you who do have the slide deck in front of you, I'm going to talk initially on slide 7, which is going to give the overview of the portfolio of assets that we currently have. The aim in the next few minutes that I'm going to talk about, really what I want to do is give an overview of the portfolio, an update on the activity that's been happening through it, and then I've got a few slides on the Coulter well. It's got a bit more detail as to what exactly the well encountered, and then on to Benin as well, and why we're so excited about the deal we've recently completed on Benin. So starting on slide 7, the right-hand side of the slide there, that shows Europe, and that's really Europe is the part that fits into the low-risk side of our strategy. It's predominantly appraisal, development assets. We're looking for assets that have a clear line to getting into production and ultimately generating cash flow. And then we want to use that cash flow as a platform to really underpin being able to go and take positions in more frontier exploration licenses. They are higher risk, but they have got that truly transformational value potential. And that's where the left-hand part of the slide comes in. With Jamaica, low-cost entry into Jamaica, large acreage position. And again, we think there's truly transformational potential there, which I'll touch in a bit more detail in a short while. And then Benin, again, very much fits that same model. We've entered there with a very low-cost entry, but again, it's a large acreage position, 4,500 square kilometres, and we think there's potential to have a lot of structures in there and a lot of running room to really get after. So that's what we're quite excited about. As I say, I've got a few slides coming up on that. The other thing, again, just before getting into the update on the portfolio, we look at the portfolio here. There's 8 licenses in it. The bulk of those licenses we've acquired in the last 18 months. We've been very busy in terms of our acquisitional activity. We've also been very busy across the portfolio in terms of our operational activity. We drilled 2 wells in the last 18 months, both with positive results. We've acquired the first bit of 3D seismic survey in Jamaica, and we're looking to continue that trend. Brian mentioned momentum. I think that's key. We really want to keep that going, both from looking at opportunities that are going to fit the portfolio, particularly things that are European low-risk side of the business, ideally with production, and also continue the activity we've done in terms of getting after drilling more wells. So starting in Europe and starting in Italy, Selva Field continues towards production. It's en route there. We have recently upgraded what were resources into reserves in the most recent CPR, which was very positive, and that was on the back of being granted a preliminary award of a production concession of the license back in January. And that's a real key milestone on the route to getting it into production. We're now completing the rest of the permitting required with the aim of doing that as fast as possible to bring that into production in 2020. And I reiterate again, once that is in production, at the rates we're projecting for that, net to us on a pre-tax basis, we're looking at something on an annual basis of over $2 million per year. So a pretty material asset for us that we're looking to get after. Now, there have been some legislative changes in Italy that have come in over the last month or two. Now, that has impacted exploration licenses. So all exploration licenses have been suspended for 18 months. Now, as we have been awarded a production concession, that actually has no impact on taking the Selva field through to production. So in some ways, it hasn't affected us in that way. And the other thing to point out there is that all of the follow-on targets that we have identified on that license fit within the production concession. So the priority for us right now is to get Selva on stream as quickly as we can, start generating cash from that, and then also then get after drilling those infill targets, which, as I say, if they fit within the production concession, we will be able to do. So Italy progressing really nicely, and looking towards, as I say, production in the near term. Moving on to the UK, and starting with the Wessex Basin, just off the south coast of the UK. That's where we just drilled the Coulter well. Had a slightly unexpected, but I'd say still pretty positive result actually. We'll come back to that. I've got a few slides on that to go through in details what exactly the well found. The well results also revealed further prospectivity and further encouragement for some of the shallower sections, so we're now looking to work that up on some of our onshore licenses, the exploration potential that's there, and we're also pushing to try and to drill a further well in the Watercross field, the redevelopment project. It's onshore, it's very shallow, so the wells will be relatively cheap, around £1 million gross, but it could have a payback period of 2 to 3 months. So we're aiming to be drilling there later this year, and again, could well have first production from that before the end of the year. So a lot happening in the Wessex Basin, and then moving on to the North Sea, where we have our Crown licenses. We're awarded in the 30th licensing round. We're actually getting towards the end of our committed work program on that. We are in the final stages of the seismic reprocessing, and we've completed the rock physics. The initial results from that actually look really positive in terms of the data quality and the additional information we've been able to get out to the data, and we're now interpreting that in order to optimize the development plan and make sure that we're moving forward to get production from that asset as soon as we can. It also means, I think, that we're getting to the stage now where we are, it's becoming a much more appropriate time or right time to start looking at actually potentially bringing in other people. So as we complete that work over the next few weeks, I think we'll be talking more seriously to companies who are potentially interested in that discovery. And I should remind people as well that was, when we were awarded, there was competition for the block. We've already been in discussions with companies and we've had interest in it. So we're looking forward to actually progressing that with the aim always of, looking to, from our point of view, to get it into production in the most efficient way, whether that is with a partner or doing further work on our own on that license. Yeah, expecting things to be worked up further on that over the coming weeks again. So that's the European side of the business. I said mainly low risk appraisal development assets. And moving across to the left-hand side of the slide, Jamaica, these are the frontier higher risk exploration targets. In Jamaica, we are now in the final stages of, we've got final volumes of the 3D seismic processing coming in. We've done the interpretation. We had a CPR completed, which Brian referred to. And the CPR result was really, really positive, I think, on that. I mean, typically when you get 3D data and more detailed data covering a prospect, in this case, Calibri, things tend to get smaller. You get more detail, it tends to get smaller. In this case, the structure stood up really, really well, and we've actually had an uplift in the volume. So we were at 219 million barrels as a mean case. That's gone up to 229 million barrels. And at the same time, with additional data, the chance of success on the prospect has increased. So Calibri, as a prospect, stands up really, really well. Within that same 3D, as the work has progressed, further prospects have been identified within that area. They are not as large as Calibri, and Calibri remains the primary focus and the most likely drill target. However, other structures have come up which could have potential stacked pay. They're at slightly shallower levels, so we've got into the license prospects such as Oriole. So, on the 3D itself, we're identifying further prospectivity, and that's not to forget the reason we really like Jamaica in the first place, which is it's a huge acreage position, over 30,000 square kilometres, and away from the 3D data on the 2D, we see a number of structures which are similar in size to Calibri, and in many cases actually bigger. It's just Calibri is being targeted as it sits in the best place to first test the petroleum system in Jamaica. So the running room there is huge. If you think of the size of Calibri at 229 million barrels, 15 or more of these structures as potential follow-ons, which will be de-risked should we drill a well on Calibri. So, yeah, Jamaica still very excited about it. Work has progressed well. The next stage is now that we're getting the final stage of the data, is to start in earnest looking for farming partners. And ultimately, we have until the end of this year to commit to a well. Most likely drilling would be in 2020. And we're working alongside Flow to bring in a partner potentially to come in for drilling that well. So yeah, Jamaica progressing really well. And then Benin, again, it's frontier exploration, low cost entry. It truly is frontiers. We've seen a few slides time, but large acreage and similar upside potential that we see in Jamaica, which again could be absolutely transformational for the company. So hopefully that's given a bit of an overview and an update on what's been happening in the portfolio. If we click on to slide 8, I'll now get into going into a bit more detail on the Coulter well results. So slide 8 shows our position in the Wessex Basin on the south coast of the UK. We have 4 licenses there. And it's an area which, has been of strategic interest to us. We know it's a prolific basin, and we know it contains Wytch Farm, which is, a 500 million barrel oil field. The Coulter well was targeting the fault block immediately to the south of the Wytch Farm field. It was a 9811A6 well, and it spudded on the 6th of February. Now, the initial borehole did not intersect the targeted structure, but made an unexpected new discovery to the south of that at Coulter South. And so, having found that, we're going, this is great, we've got something extra here, but there's still significant potential remaining at Coulter. So the decision was made by the JV to sidetrack the well to the north to go back into the Coulter structure itself. The sidetrack, the Sherwood Sandstone Reservoir section, came in below the oil water contact of the 9113 well, suggesting the original Coulter structure is actually smaller than we had in the pre-drill estimates. However, the sidetrack, when it was drilled, this found very strong shows in the shallow Jurassic section, and that has really encouraging implications for prospectivity along strike that extends into the onshore blocks that we're in the Pedal 330 and Pedal 345. And work is continuing to work it up and make a forward work program to get after that in the onshore. The other thing I should say, as we go through the slides and any comments here, the evaluation of both Coulter and Coulter South is currently underway. So what I'm presenting here really is an initial interpretation. And over the coming weeks, as that work is firmed up and we really get that understanding all integrated together, some of that could change a little bit. So it is what we, our current best understanding at the moment. And before we go on to the next slide, I think, we talked about, okay, it wasn't expected, but the Coulter South structure, it had been identified by Corellian pre-drill and believed to hold maybe about 15 million barrels. The well actually shows it's aerially more extensive than had been mapped pre-drill and could potentially be significantly larger than that size. So we're looking at a pretty substantial discovery potentially here, potentially even bigger than we had in the original Coulter target. So clicking on to slide 9, and this is really a number of schematic diagrams or map views. I should caveat it that they are very much schematic rather than to scale, but really by way of trying to explain what happened with the well and how the unexpected result happened. So you start on the left-hand side, so the 6th of February. So this is a pre-drill view. We were targeting an area up dip of the 9811-3 well, which had found 10.5 meters oil column, targeting an up dip area with the idea of demonstrating the size of the structure around that. As I say, you can see on this as well, the Coulter South prospect has been identified, but was relatively small. There was a well drilled there in 1983, 9811-1 well. Had very strong oil shows down to 1,779 meters and weak shows below that, but it was never really clear whether that had been actually a genuine oil column. So when the well was drilled, we moved to the 25th of February when we drilled the initial borehole was completed. We came in and found a 9.4 meter gross pay interval, and that had an apparent oil water contact at exactly the same level as that seen in the 9811-1 well. So it corroborates the story that we have actually got. We've tagged the edge in both those wells with what is a significantly larger structure. And as you can see, although it is schematic, the area of that structure has increased quite dramatically. So we're now looking to work with us to actually put some firmer volumes around it. But I think it's fairly clear to us that it should be upwards of that 50 million barrels that was pre-drill estimate. We can still see there's still potential to have a pretty sizable accumulation in the original structure that was being targeted. So we decided to drill a sidetrack to the north to intersect that. Now, when the sidetrack was drilled, it actually came in below the oil-water contact. So although we know there's still an accumulation at Coulter, we now have the view that it is actually smaller than we had held pre-drill. However, as I said, there was strong shows in the shallower section of that, and we have a substantial accumulation at Coulter South discovery, which we did not have before we drilled the well. So what does all this mean in terms of learnings? What can we take from it? I think, before we drilled the well, we knew it was a structurally complicated area with some seismic imaging challenges, and that's really been borne out. Subtle changes to the map faults can really make quite a large difference to the interpreted structure, and again highlights the need of really making sure you've got the best possible pre-drill data. However, and I think this is what you always come down to, there is always uncertainty in the subsurface, and drilling wells is actually the only way to really provide clarity and really understand what is going on there. So, we're talking here about an unexpected discovery or serendipitous discovery in Coulter South. However, what I would say is it really actually supports our strategy of going after the Wessex Basin, which we know to be a prolific basin. The best chance of making discoveries like that, or finding oil where you might not expect it, is when you're drilling a place where you know there's oil there in the first place. So I think it actually is a bit of an endorsement to the strategy we've been pursuing in going into Wessex Basin. And when we look at what we're now doing, work, as I said, is now in progress. We're really trying to finalise the new volumetrics and define a sensible work program, basically looking to commercialisation options around the Coulter South discovery, as well as how we best follow up on those positive indications in the shallower Jurassic sections. And that's what we'll be doing, firming up over the next 3 weeks and discussing in detail with partners. So moving on to slide 10, and this is just to finish up on Coulter. Just saying, obviously there was additional cost with the sidetrack that was drilled. However, when you look at how you take the sidetrack out of the equation, look at how the timeline and drilling schedule compared, we actually compared pretty well. It was drilled largely on time and, largely, without too much in terms of overruns on the AFE. So from that sense, again, you could say quite a successful well. So in summary, I think we've kind of learned a lot from the well. It wasn't necessarily expected, but it has been a pretty positive result, especially when you consider the potential size of Coulter South discovery. So that's the Coulter update, and then moving on to something completely different, really, with the onshore Benin now. Onshore Benin Block B, say low cost, very early stage entry. It is a high risk opportunity, but it has got that absolute transformational upside. So in terms of what the opportunity actually is, it's an onshore block on the western side of the coastal section of Benin. It's large, 4,590 square kilometres, operated by Elephant Oil Limited. It truly is a frontier area. I mean, if you look at this, sits within the Dahomey embayment. The Dahomey embayment stretches from Ghana in the west to Nigeria in the east. And within that entire area, only 11 wells have been drilled to date, and none of those have been in Benin. And yet, almost half of those have found hydrocarbons. So there's a lot of positive indications that things are working here. We know there's a working petroleum system in the shelfal area of Benin. We've got the semi-field with approximately 100 million barrels reserves within Cretaceous reservoir section. So we know there are positive indications there. And overall, this really fits really well with United's business model. We're continuing to build a portfolio of near-term, low-risk assets and looking to build a producing business focused in Europe, but we want to have, exposure to these much more higher risk frontier opportunities that have got that transformational potential. And again, we're looking to do that in areas we know well. Benin in Africa, it's an area we've previously experienced of, fits nicely alongside and complements very nicely Jamaica as well within the portfolio. So slide 12, this gets into, I think, a bit more of the reason why we actually like this block in particular. First of all, there's a number of gas and oil receipts reported from within the block. So although we know we've got the offshore semi-field, there's also indications that oil is getting into that onshore area. There was a gas seep reported from excavations along a river close to the coast, and that was typed to show it had heavier ends than actually a thermogenic gas seep. We've got indications of biodegraded oil in a water well. And if you go across the Benin border into Nigeria, there's an extensive tar belt which has had oil that's migrated into it, and where the Cretaceous section onlaps onto the basement, that oil is coming out of the ground. There's really good indications that oil is migrating through this onshore section. The data set we have is very limited. There's one seismic line, and there is a gravity gradiometry survey that covers the entire acreage. Now, although there's not much data there, and there's a lot of uncertainty around it, the data we do have suggests the presence of a number of large structures, potentially holding over 200 million barrels when you look at the aerial extent of some of those structures as they've been mapped. And then our entry into this, we are funding a passive seismic survey that's currently underway and looking to do further field work. The exposure to us is less than $200,000, and that preserves an option enabling us to enter the license for 20%. And the goal of that work is really to not only calibrate the depth of the basement, understand that section in the onshore better, but also to get further information on the oil and gas seeps. We're looking to really understand the maturity and migration in the area and de-risk that ahead of making a decision to complete the exercise farming option. And then just to finish up on Benin on slide 13, which is the one seismic line that goes through that. And if you look to just underneath the A, you can see there are clear structures identified on that one line, and those tie in with some of the structures identified from the gravity gradiometry data, which is the map view that's shown there. And when you look at the size of those structures and the number of them, now although again I say this is early stage data, there is still a lot of uncertainty on it, you can clearly see the running room that is there with the size of these structures, particularly in an onshore setting when drilling is not likely to be too expensive. So we're working that up. We think there's a lot of really positive indications. So it's great to get in at this stage. We're going to complete the initial passive seismic fieldwork program, and then talk in conjunction with Elephant Oil, obviously as operator, look at the best work program forward and how we take this forward to actually getting to drill some exploration wells here. Now, there's a number of other slides in the pack which go through the rest of the portfolio, but as I've already talked around a lot of that on the map itself, I think I'll just skip to slide 20 and give a quick summary of the operational highlights and what's coming up over the next few months. So, operationally, the last 18 months, we've drilled 2 successful wells. We've been involved in the acquisition of Jamaica's first 3D seismic survey. We've very recently agreed a farming option on Benin, and currently in the portfolio we have a total of 8 licenses within our portfolio, spread between Europe and the low risk side of the business and the other side of the strategy, which is Jamaica and Benin. And what's coming up over the next few months? Well, we've already drilled the Coulter well, and we'll be continuing to work that up and actually complete our interpretation in a post-drill sense. We're looking to progress drilling at Waddock Cross and hopefully move that onto production. We're completing the Jamaica 3D interpretation and commencing the farm down there jointly with Tullow Oil. Crown discovery has moved on significantly. We're nearly complete in the subsurface work, and we're now moving towards putting together a firmer development plan, and again, looking for options as to how we progress that forward, possibly with other partners. And we're completing our passive seismic acquisition and fieldwork in Benin, again, ahead of defining a larger work program on that. So we've been really busy. We're going to continue to be really busy. And on top of everything that's on that slide there, we are looking at a number of, we're continuously looking at a number of further acquisition opportunities. I think, we're ideally looking for something that will complement the lower risk European focus side of the business, bringing in production and cash flow. And with that, I think that's gone through the portfolio. I'll pass back to Brian.
Thanks, Sean. I think the key deliverables or the key points being over the last number of months is firstly that we're very happy, satisfied anyway, we're certainly very satisfied with the progress we've made across the existing asset base and moving our work programs forward and trying to create as much value in the assets as we possibly can. I think the key points of deliverables being that Coulter South could be potentially bigger than our pre-drill expectations, and we'll evaluate the post-drill results over the next weeks and months and hopefully provide an update to shareholders on that in due course. also Selva moving into production is key for the company in that it's cash flow generative. And to put some context on that, we drilled Calder for approximately £1.1 million, and as John has already said, it'll kick out £2 million post-tax for potentially 10 years. So in terms of scale in terms of return on money, it certainly creates a lot of value for our shareholders. Alongside all of that, we've had significant interest in Crown, so we're very pleased with the progress we've made across the existing asset base. Just to touch upon new ventures, coupled with developing the existing asset base, we're also focused on adding a production development asset into the portfolio. I think what's going to be key here is patience, because ultimately we're negotiating with much larger companies than us. Now, as a team, we're very well connected, and we have quite a lot of connections with senior executives in much larger companies. Now, what that does for us is it gets us in the door and it starts a conversation. I probably need to be a little bit careful here because some of the people we're talking to could actually be on the call. But once we're in the door, we then work with the local team to complete a first pass evaluation. Once we're satisfied or we like what we see, we'll then commence a commercial negotiation to essentially negotiate a potential transaction. Those discussions and negotiations tend to have to be fed up the food chain and fed back down again. So a particular point of negotiation can sometimes take a week or two to be ironed out or to be agreed. That's the nature of negotiating with much bigger companies. It takes time. If we can find a common ground on a transaction, then a further deep dive due diligence takes place. So the timeline from first initial conversation or first coffee and in some instances first pint to signing a CPA can normally take between 3 to 4 months. And with regard to some of the opportunities that we're looking at, there is two in particular, we're well into that process. However, at this stage, I can't give any guarantees that we'll complete either, but we're certainly working very hard to complete one. The easy thing for us to do would be to run out and do any deal and generate a headline. But over the longer term and the longer course, we certainly don't believe that would be value creative for our shareholders. It might be initially, but it's critically important that we do the right deal, and we'd rather be patient than run out and do any deal. As I said, we are looking at two opportunities. We're hoping to make progress on those. And along with being advanced on those two, we have approximately another 8 to 10 to be evaluated and under evaluation. And on top of all of that, we continue to track more opportunities into our pipeline. We're now under NDA with 3 or 4 large FTSE 100 companies to explore opportunities of working together on divestment projects. And we've managed to establish these NDAs due to our relationships with the senior management teams within those companies. I guess all of this work ultimately will run concurrent with discussions on the production development deals that we have and that we're currently advancing. And I can assure all shareholders that the team is working very hard on the right assets into the company. And that's really a critical point, that it's the right assets, but not only the right assets that have a strong technical case and that the economics stack up. And as I said, we can't guarantee a deal will complete, but we're working as hard as we can to build the company sensibly. We're in the business to generate as much value as we possibly can for our shareholders and invest cash as sensibly as we possibly can, and we take that incredibly seriously. I think that probably covers most things operationally, commercially, and in terms of new ventures. So at this stage, we're happy to take some questions. Do we want to start with some of the questions that have been already submitted? Maybe that's the best place to start.
A couple of questions on Jamaica. When will Tullow drill the Jamaica prospect, and what's the schedule of work over the next 12 months there?
John?
Yeah, sure. I think Jamaica prospect, in terms of the license, the commitment to drill the well has been made by the end of this year. And then there would be a 2-year period in which to drill it. We'd be targeting drilling it in 2020. In terms of the work schedule over the next 12 months, data sets now are largely finalised. Interpretation is still ongoing, and the next stage really is to really get into the joint venture farm down process, and look at whether options to bringing other companies in to take part in any drilling.
There's a second question on Jamaica. What additional detail can you share around the Jamaica license 3D seismic results separate from Colibri?
Hopefully I touched on that a little bit when we were going through the portfolio. The 3D results, I mean, it's a really nice data set. We had really positive outcome on Colibri with it. And at the same time, there are a number of other prospects which haven't actually been identified to the same extent on the 2D. I guess foremost of those is one that's been called Oriole. It's in shallower stratigraphy. It sits to the northwest of Colibri. Potential for stacked pay there. We see really nice amplitude response and amplitude support for it. So it looks like quite an interesting prospect. It's not as large a structure as Colibri. Could still hold significant volumes and could still hold commercial volumes on a standalone basis. But yeah, so there are a number of other prospects that have been identified on the 3D that came out because of the quality of the data that's there. So those have been worked up. And then I think, as I also said earlier, I mean, I think to us the really big piece is some of the upside beyond the 3D. We're always going to be limited when you've got a 30,000 square kilometre license. It's very hard to cover it all in 3D straight away. So we've covered just over 2,000 square kilometres. There's a huge amount there that's still only covered in 2D. And we see a lot of follow-up potential in structures the size of Colibri or larger, which would be de-risked given a success on Colibri. So, that's when we talk about transformation, it's not just Colibri on its own with its 229 million barrels, which is pretty significant as a standalone. There are other things in the 3D area, like Oriole, and then there's another 15 or more similar size to Colibri to get after. So, the potential is just huge.
I think the real, just to tag something onto the back of that, I think the real kind of thing with Colibri will be, it was chosen because it's the most likely target to de-risk the entire play. And I think if that's a success, in any shape or form, I think any type of whiff of success in Colibri will open up the whole play. And as John said, it's transformation. It's not just transformation. It's quite life-changing for our shareholders. If you run the economics on Colibri and then multiply it by 10 or 15, I mean, the maths are just astounding. And it goes back to what I mentioned at the beginning, that it's quite a unique opportunity to have in a portfolio of a microcap.
A couple of questions on Italy, particularly the Italian government's recent legislation for E&P activities in the country. You've covered how it won't affect Selva and the prospects within it. But there's a question here saying, how does it affect any planned 3D seismic activity this year?
I think we're still planning to get the 3D seismic done. I think what has happened with the legislation coming in is that our focus has very much been we want to get Selva on stream, and that's the priority, and make sure we get that producing and generating cash. So that has become the focus. We have the plans ready to go for 3D. It could still happen this year. The prospects and the follow-on targets that have been identified sit within the production concession, so it is something that we can get after. It's just a case of actually prioritising what we do with our time in Italy.
And some more general questions. What is your expectation on the length of time until UOG is generating enough cash to be self-sufficient and no longer reliant on equity fundraising?
That's a really good question. It's a really good question. And I think if you look at the existing asset base, and John has already touched upon it, we are expecting first production from Selva in 2020. That's still on course. Development plan has been approved. We've touched upon the economics of Selva already. In addition to that, we're hoping to drill a well in Watercross at some stage later this year. That is a field that was previously in production. So hopefully, subject to a success in that case, it'd be a question that's practically just a plumbing job post completion. So you would hope that we would have production from both fields certainly in 2020. potentially in 2019 from Watercross, but certainly we're confident we'll have production in 2020. The existing asset base for the rest of this year is fully funded. So if you put the two together, in theory, the existing asset base is fully funded for the next number of years, because we will have production kicking in from Italy and from Watercross. So yeah, we would actually consider ourselves to be pretty much self-sufficient right now, because of our production kicking in next year.
You recently mentioned that two potential deals were at the later stages of negotiations. How confident are you that one or both will complete, and how significant are these deals?
To be fair, I think it's unlikely we would do both, particularly because of the size and nature of the transactions we've got. We are looking at two. We're in discussions on two. My nomad has warned me that I'm not allowed to say too much, but we certainly would like to get one of them over the line. Two, I think, wouldn't be practical for our bandwidth, but I'm certainly confident that we can advance one.
Has the recent share price movement been frustrating for you, and do you have any views on why this has happened?
Yeah, obviously, naturally, it's been very frustrating for us. The entire exec team have most of everything they own sitting within the share price, so we have felt the pain of the share price not performing, and it's frustrating because we've had the Calibri result, which has been impressive. We've moved the assets forward in terms of Selva. The concession, or the production concession, been approved. We've had progress in Jamaica. So all of these things, and yet ultimately the share price has fallen out. So it is quite frustrating. It's difficult to explain, because I think a lot of things have moved against us in terms of market sentiment. The uncertainty around Brexit hasn't helped. But ultimately, what we're going to continue to do is continue to develop our assets and our business. And as I've said before, if we consistently do things the right way, consistently, we should see that reflected ultimately in the share price. So it has been frustrating. It's been very frustrating for us personally, given that we've so much, essentially everything we own in the company. So when the share price goes down, we feel it.
What news flow should investors expect in the next 6 months?
Well, I think as John has touched upon some of the things that we're currently working on in terms of, I'll pass this one to John. It's probably the best thing, but we've got the Calder post-drill work program, where we've got a number of parties interested looking at Jamaica. We have a number of parties looking at Crown, and we were also looking at a couple of potential new acquisitions into the portfolio.
I think that's right. I think we've got, potential farm downs, Jamaica, potential farm downs on Crown, taking Benin further after the initial passive seismic and fieldwork acquisition, and then also progressing towards well planning on the Watercross well for later in the year. So quite a bit coming up.
Just to make one other point, just on the share price movement, it's quite frustrating, because one of the limiting factors we have to grow in the business is the share price. It's one limiting factor to grow in the business, and when you're looking at other opportunities, you have to make a decision. If one is advancing, can you do it given where your share price is at? So it becomes a little bit of a catch-22. Whilst our shareholders have given us a mandate to grow the business, and there's two ways you do that: development of the existing asset base, that's also through divestment, and it's also through acquisition. And what can be quite frustrating is when you see opportunities come along and then you contrast that to the price of your paper. You have to ask yourself the question: are you willing to issue paper at this price? So I guess it is extremely frustrating in terms of growing the business, and then from a personal wealth perspective, it's extremely frustrating.
Brian,
Mm-hmm.
just while I've done that, I can say that I think a little bit of the market is thinking when how you're going to structure these deals, perhaps. And I know you've hinted at not going down equity placing routes, and you're looking at other more innovative ways, which certainly should be able to do, given the fact that you're looking at production deals and you've also booked reserves which opens you up to reserve-based lending, and maybe you could go into some of the plans there, because I, for one, as a shareholder, am very, very keen for you to bring in and use the price of the paper to bring in deals and not have that holding you back at all. And I think that everything will be done in the right manner.
Well, that's it. I mean, we've always said that, we when we're looking at new opportunities, you evaluate them as a standalone, and you are quite right. We've got maiden reserves from Selva in Italy, and we can potentially look at a reserve-based lending facility over that asset now, and we're also looking at other innovative financing structures such as offtake. I mean, there's a lot of larger companies that are keen to keep their barrels of production up, and sometimes that means acquiring production up front for micro and mid caps. So there's a lot of alternative options we have to reduce any potential equity dilution. But it's important that you get the mix of financing right for each deal, and that takes some time. We need to take some time to consider that, so that any dilution is absolutely minimized in order to generate the maximum upside in terms of return in the share price. So we are looking at a number of alternative financing structures. We have been talking to the banks most recently, and the feedback we've had has been very encouraging and very supportive, and we'll continue to move those discussions forward. And hopefully, when we finalise something, and hopefully the not too distant future, we can add a number of financing structures around it to get it over the line.
Oh, hi. So I have a question regarding investor relations and everything. Except outside of this call, where most probably are current shareholders, how are you working with the city, or how are you working with spreading the word about United Oil and Gas? Are you doing any road shows or any meetings outside of these this forum?
Well, it's a really good question, and it's one of the key objectives that I have for this year is to grow the story and get the message out there. We are actually this week holding a analyst roadshow to introduce them to United, people who we haven't met before, so they start following us. We had a very good media day hosted and arranged by our PR advisor, St. Bride's, at the beginning of the year, where we met a number of journalists who were now on their watch list. Our head office is based in Dublin, as most people will know, and currently I'm spending 2 to 3 days a week in London. With my key objective is raising the profile of the company, working closely with our PR and our IR team, and also meeting as many fund managers, institutional brokers around town, private client managers around town, so that they know of the United story, and try and spread it as much as we can. And then just in terms of regular media engagement, previously, and what I've always tried to do is to do a podcast every 6 to 8 weeks. I've tried to do a proactive interview one every 3 months or one every quarter. And we host two shareholder evenings a year, one around midsummer and one at the back end of the year, which we did last year. And all the feedback from all of it has been fairly good. And as I mentioned, going forward, we plan on holding quarterly shareholder calls. We've always targeted to host a shareholder call quarterly, and I think going forward it's going to become part of our formal IR PR engagement. And one other thing I can suggest is, there's a mail shot goes out for this call. There's an RNS that goes out. The only thing I can ask our shareholders is to pass on the RNSs to other people, help us grow the story, invite other people onto the call, share the call details, and to help us grow the story. It's in everybody's interest. We're all in this together, so it's in everybody's interest to help promote the United story, and any help that you can give us is certainly greatly received in terms of spreading the message and spreading the story.
One further question here. With one exception, why have directors not purchased shares in the open market over the last 15 months, especially when we keep hearing that UOG is significantly undervalued?
Well, UOG is significantly undervalued without question. We have a research note out I think our last research now the target price, and I'm looking to John here, about 16-17p. So without question, UOG is undervalued. The issue isn't, we'd love to buy stock, but we're in a closed period. And if you look back historically over the last year and look at the news flow, the window for the executive team to buy stock is pretty much non-existent. Between deal flow, between wells being drilled, and then AIM moves, and on top of all of that, you've also got then the financial reporting in terms of interims and annual statements. So it's left us in a position where we're nearly always in a closed period. But just on top of that, just to mention in terms of management alignment with shareholders, and I've touched upon it already. The executive team, management team United, own including warrants and options, own approximately 10% of the company. And certainly in the early days, for the first 2 years of the company, there was no salaries paid. Everything we had went into funding the company, getting trips back and forth to London, sourcing deals, paying for, technical support in terms of evaluations. And on top of all of that, then mortgages had to be paid and bills had to be paid. So in terms of our alignment, the management team is fully committed to the company. When the share price goes down, we absolutely feel it, and we absolutely feel it because everything we've got went into the company. I also think it's important to add that we don't take, in comparative to our peer group, we don't take big salaries. So, what we've endeavoured to do is leave as much money in the company as we can to continue to reinvest that capital into the asset base, because we certainly believe in the longer term the management team will be rewarded in terms of share price increasing and from that perspective. So we're patient in that regard. We would love to buy stock. We absolutely would. Our Nomad has told us that it is out of the question given what we're currently working on. And on the other side of that coin, perhaps it's a good thing because we're working on business development opportunities that we believe should dramatically increase the value of the company. Any other questions?
Can you hear me okay?
Yes.
Yep. One quick question. I'm sure you're aware of the Rockrose Energy Marathon Oil deal that was announced recently. Are you any of the transactions that you're looking at or would you consider transactions of a similar nature? I guess should be a more open question.
I guess it will come down to scalability really, and it's a difficult question to answer because each opportunity we look at is really evaluated on a standalone basis. But I guess it will come down to a number of things really. How value creative is it? Can we, do we see synergies within portfolios? Is it a deal that we believe will add to what we've currently got and help grow the company? What I think is interesting about transactions like that, the one you've just mentioned, and others that are currently taking place, we've got a very close watchful eye on them. Because the reason being is normally when portfolios are put together or there's big divestments or big acquisitions, there's normally the buyer then rationalises their own portfolio when they've brought new things into the hopper. And that's an opportunity. That's an opportunity for us. So we watch the larger deal flow as closely as we watch smaller deal flow because, invariably there is a shaking of the tree and there could be something that could fall out for us that could add significant value to our portfolio and become part of our growth story.
Brilliant. Thank you.
Anything else?
Brian, with regard to growth, and I guess wrapping up, where would you like to see United in say a year's time and then maybe 2 years' time? Given that you've got potential partners looking at Jamaica, a few some of the European business developing, and of course your new ventures with potential production coming on stream.
That's a good question, and it's a good question. If you look at the slide deck, and I've mentioned this before, there's a slide in there, slide 6, and it's the oil and gas life cycle and how our portfolio fits into that. And currently, we've got exploration, appraisal, discovery assets, development assets, and production assets. And what we want to do is grow that that slide outwardly and continue to populate the different elements of the oil and gas life cycle. If you look at where we were a year ago, we had an NPV portfolio value risk of about 7 million. Today, we have a portfolio value risk of approximately 70 million. So in terms of portfolio asset NPV growth, we've done 10 times in a year. Now, if we were to apply the same metric over the next 12 months, that would be highly ambitious, but certainly it will give you a sense of what we've done. And, as we've said before, we want to continue our growth momentum and grow that oil and gas life cycle graph diagram outwardly with more valued assets. And that will involve acquisition, but it'll also involve potential divestment. So the plan really is to continue what we're doing, continue to grow the business, and certainly break that 100 million market cap number as soon as we possibly can. We've always been extremely ambitious with the company. I've never shied away from that. And I go back to the comment I made about new venture opportunities, and it'd be very easy for us to go out and do something small tomorrow, but 3, 4, 5 other guys could do the exact same thing. What we want to do is we want to do something different. We want to do something that moves us up the leagues, and that takes a bit of patience, and it takes a bit of ambition and a bit of determination. But I certainly feel that as a company now today, we've certainly got a very strong platform to build upon. The current portfolio that we've put together is fully funded. We are moving the entire asset base forward. We've got Selva moving into production. We've got huge interest in Jamaica. We've got significant interest in Crown. We hope to drill a well and water cross in the second half of this year. So, we need to continue to grow the existing asset base, be mindful of divestment opportunities, but also look to grow the business from a merger and acquisition perspective, so that we can certainly target a 100 million market cap company as quickly as possible. And for those of you that know as well, you'll know that as soon as we get to 100 million market cap, we'll be targeting a 250 million market cap company, because that's why we started the company. That's why we left Tullow, was to start a company that we could grow and build. And we're looking forward to the next steps now. Any other questions before we wrap up? Okay. Look, just thank you everybody for taking the time to join the call today. I hope it was helpful. As I said, we intend to have quarterly shareholder calls going forward. We hope to hold an event maybe late summer in terms of a shareholder evening, and hopefully at that stage we'll see a lot of you there, and hopefully we'll have a lot more to talk about too. So thank you all for your time. Thank you for the questions, and no doubt I'll talk to you all soon.
Thanks everybody.